For some cryptocurrencies, June was a tainted month. The US Securities and Exchange Commission came raging at the likes of ADA, Sol, and others. The two prominent crypto exchanges, Binance and Coinbase, were not left as many were stunned as the outrageous charges leveled against them. Perhaps the story was not clear. Is there any other thing that we need to know? Sam Bankman-Fried is not the one to blame, and is not what you're thinking. Everyone assumes that the SEC is upbeat this year because of the FTX exchange saga, which happened last year. The truth is that a lot of regulatory upsides happen, so let's stop the notion that Bankman is the enemy who ushered us into a forest of wild regulations. It could have happened anyways. In crypto, sentiment is critical, and the industry has had a rough ride since last year, with the collapse of FTX. The spectacular collapse of FTX ushered in a so-called crypto winter that is yet to dissipate. But it's not the only event that sponsors this negative sentiment. Now, to the SEC crypto issue, are there loopholes to this particular story? The US Securities and Exchange Commission cracked down on cryptocurrency behemoths Binance and Coinbase. It filed a lawsuit against the world's biggest cryptocurrency exchanges, and Coinbase and Binance were both alleged to have violated the law by operating as security exchanges without registering their business with the SEC. Binance also faced charges of diverting customer funds into a separate business, among other accusations. For Coinbase, the SEC alleged that it traded at least 13 crypto assets that are securities, while it accused Binance of offering 12 cryptocurrency coins without registering them. All eyes were on Gensler, since Gary Gensler became the chairperson of the Wall Street's regulating body 2 years ago, and his messages to cryptocurrency firms have been unflinching. We don't need more digital currency. We already have a digital currency. It's called the US dollar. He always says, noting that he would do all it takes to tame a world he likens to the Wild West. Perhaps it's even Gensler versus crypto. Gensler believes that most cryptocurrencies are securities, therefore the current law gives his agency the power to regulate them. Well, that's something that the crypto companies have fought tooth and nail for. By design, crypto is supposed to operate outside of the traditional financial system. Notably, Coinbase and Binance were both accused of failing to register their exchanges with the SEC. And once again, crypto firms are by design supposed to operate outside of the traditional financial system. Binance perhaps faces the most serious allegations, including that the exchange and its CEO, Chanpeng Zhao, misled investors about the exchange's ability to detect market manipulation, and it misused customer funds. We're operating as a business as usual. These cases sometimes aren't resolved not only for many months, but many years, Paul Grewal, Coinbase chief legal officer, said. The longer this drags out, the more it would determine how crypto investors see these two companies. And indeed, in the days since the lawsuits were announced, there have been significant outflows from Coinbase and Binance exchanges. Plus, this is not just Coinbase and Binance being affected by this. This lawsuit is also threatening to create a lot of uncertainty and further erode confidence in the entire sector. Coinbase and Binance join a list of crypto companies against which the SEC has taken action, including Kraken, Genesis, and Gemini. Cryptocurrencies are witnessing trying times since the last year. With the collapse of FTX, its now former CEO Sam Bankman-Fried faces civil charges from the SEC and the CFTC. Among all cryptocurrencies, Bitcoin has been bubbling in popularity, although it is still nowhere near as widely held as stocks. A recent research report estimated that 12% of the population owns crypto investments in the US. Hence, more regulation and transparency might pave the way for more investment in crypto, and it just might get tougher. However, recently, there has been jubilation as Ripple Labs scored a victory in the United States District Court in the Southern District of New York on July 13th. Judge Annalisa Torres ruled partially in the favor of the company in the case brought forward by the Securities and Exchange Commission dating back to 2020. According to documents filed on July 13th, Judge Torres granted summary judgment in favor of Ripple Labs, ruling that the XRP token is not a security, but only in regards to programmatic sales on digital asset exchanges. And this in of itself is great news. Nonetheless, the SEC also managed to notch a victory of its own, as the federal judge also ruled that XRP is a security when sold to institutional investors, as it aligns with the conditions stated in the Howey test. The SEC lawsuit sought to compel Ripple to stop offering its XRP token under the premise that XRP was the security and thus required additional regulation. According to the court documents, defendants' motion for summary judgment is granted as to the programmatic sales, the other distribution, and Larson and Garlinghouse sales, and denied as to the institutional sales. Within a matter of minutes after the news broke, the price of XRP skyrocketed from 45 cents to 61 cents. Well, it's a huge relief. At least the SEC did lose some points there. The case against Ripple has been ongoing since December of 2020, and when the SEC sued Ripple and its two chief executives, Brad Garlinghouse and Chris Larson, over the allegations that the company was offering an unregistered security. Over the past 3 years, the case has had its fair share of dramatic interventions, including the release of the Hinman documents and defiance in the face of the SEC's accusation from Garlinghouse. Along with the palpable moves demonstrated by the XRP token pumping on the news, the overall sentiment across the crypto community appeared to be one of jubilation. A little more dig into the story, Ripple Labs first appeared on the fintech landscape in 2012 with a reassuring promise to provide financial institutions with low cost and speedy clearance of cross-border money transfers. To accomplish this, the business created the RippleNet network, on which transactions in the form of cryptocurrency called XRP can be settled and clear in real time. As expected, XRP grew outside of its stated application. The company's founders used XRP to raise funds in 2013. As a result, the SEC filed a lawsuit against Ripple Labs and its current and previous CEOs in 2020. The SEC equally alleged that the executives held an initial public offering of XRP, which was an unregistered security at the time of raising capital. According to the complaint, Ripple raised funds by selling the XRP token in unregistered security offerings to investors in the United States and worldwide. In addition, Ripple would offer billions of XRP in exchange for non-cash services like market making and labor. There's no need to go around in circles. The issues have been partially settled. Now XRP can finally catch a breath of fresh air. It is safe to ask what the new XRP ruling means for other cryptocurrencies, with the latest court ruling that XRP is not an investment contract itself. Some members of the crypto industry are hopeful that the SEC will be forced to take a more hands-off approach going forward. In addition to XRP, several other crypto assets that had been previously deemed securities such as Cardano, Solana, and Polygon rallied on the news of the Ripple court order. Now, it's possible that crypto assets could be traded as unregistered securities in a situation where they're sufficiently decentralized or not sold directly to retail. According to experts, it would be difficult to conclude that staking rewards are securities in the context of Ripple's ruling. Cardano can also breathe for a while. However, it is interesting to know that the world's fourth most populous country did not share the same opinions as the US SEC. Indonesia's market regulator has declared Cardano's native token ADA as a commodity, signaling a significant milestone in the global cryptocurrency arena. To everyone's surprise, Cardano was deemed a commodity in Indonesia, so the XRP ruling seems like an added perk. As stated in reports, through an amendment to the country's former Trade Controlling Agency Regulations Commodity Futures number 11 of 2022 on June 9th, Bapepti, the agency responsible for regulating commodity futures trading in Indonesia, classified over 450 cryptocurrencies, including Cardano, as commodities, allowing them to be traded within established regulatory frameworks. According to the document's preamble, extensive evaluations were conducted before listing the cryptocurrencies, considering utility, functionality, and intrinsic value within their respective blockchain ecosystems. By subjecting these cryptocurrencies to such scrutiny, Bapepti noted that it aimed to provide clarity and investor protection while promoting innovation and technological advancement in the cryptocurrency space. ADA's value was recognized, given its utility and pivotal role within the Cardano blockchain ecosystem. The Indonesian government's classification of ADA and other cryptocurrencies as commodities reflected a potential power shift in the cryptocurrency landscape, with countries like Indonesia and China embracing and recognizing cryptocurrencies as tradable assets. Things are just about to get interesting, and even the SEC can't stop this possibility, not just for Cardano, but for every crypto out there. But that's going to do it for today's video. Make sure you subscribe and hit the notification buttons, and we'll see you in the next video.